For those who are unfamiliar, I would say a couple different things. First of all, to understand that commercial real estate loans, when we say long-term debt, we're usually talking about 5 to 7 years, maybe up to 10 years. But it's not like buying a single family home and putting a 30-year fixed rate mortgage on a property. And then you have a series of years usually that can be interest only. So you're not having to amortize the loan, which gives you more available cash flow. So here's the problem. If you bought a deal 5 years ago, okay, with 5 year interest only debt, and you were able to get a 3% loan back then, that maturity is coming up this year, and mortgages have gone from 3% to say 7%. So you're going to have to figure out what you're going to do at this point. If you just flat put a new loan on, do a refinance at 7, that could demolish your available cash flow. Okay. And the interest rate caps are like an insurance policy. And couple of years ago, you could have bought one, let's just make up numbers, I'll say for $80,000 because interest rates have been low and, for many, many years. Well, now some of those interest rate caps are $1 million. So how are you going to buy the interest rate cap if it's $1 million and you don't have adequate cash reserves? You have to stop distributions. You have to either do a capital call and ask investors for more money. You have to sell in a somewhat soft market where pricing's relatively, say, 20% down, and that's not an ideal time. So none of these are good options, right? And so to your point, across the board of, say, 50 deals that I'm in with all these different operators, there's a definite handful, probably 7 of them, that have either paused distributions, moved to quarterly distributions, cut distributions. So far, no one's looking at a capital call, but time will tell. So with Ashcroft, thankfully, this year in 2023, we don't have any debt that's maturing. So we're not going to be in a position where we're forced to sell or do any kind of anything really this year. So we're sitting good in that regard, but who knows what the future holds? Does the Fed just keep raising and raising and raising? Do they stagnate or do they start cutting towards the end of the year? I don't know. But if they do start cutting, that's going to be an opportunity for us to refinance like crazy and everybody else for that matter. And it's really going to help valuations. So we'll see.